Okay. Awesome. So, good afternoon, everyone. Thank you so much for being here. My name is Patricia Parra. I'm a program director at the Health Education Council. I oversee our economic well-being program, which is our financial education work, our small business support programs, and workforce development. And so, with that, I'm going to hand it over to Joseph, who will tell us a little bit about the SBDC, and he'll also give us an introduction to our guest speaker tonight, which is Deborah, and she's going to take us through some bookkeeping for small business owners. Joseph, take it away.
All right. Thank you so much. Pleasure to be here. Good evening, folks. My name is Joseph Cordova. I'm the program coordinator with the Sacramento Valley SBDC. I'm here to share a little bit about the program and how we can potentially help your business. So what I'll do is I'll share my screen, go over some kind of some basic overview of kind of the SBDC and the services that we provide, and then I'll go ahead and throw it over to our host. So thanks, folks. Let me go ahead and share my screen now. And share. Let's go ahead and get the. All right. So welcome, Sacramento Valley SBDC. So just a quick disclaimer that we usually put out on any kind of sessions that we're a part of, or our advisors are a part of. The information provided in this webinar and any supplementary materials provided to registrants are intended for educational and informational purposes only, and does not constitute professional, financial, or legal advice. Okay, so the SBDC. So what are we? Who we are? We're a national program with over 1,000 locations. We help to stimulate economic growth through business development. We're a proud resource partner of the SBA, serving 36 counties with 18 centers in the Northern California Regional Network. The Sacramento Valley SBDC, we serve Sacramento, Yolo, Sutter, and Yuba County. So what do? Basically provide professional, no cost, no obligation technical assistance, business consulting, training, and resources to small business. Services can include pretty much anything you're can think of to get that business to the next level, whether that's writing a business plan, understanding business structures, permitting, licensing, access to capital in the early stages, financial management, bookkeeping, HR, social media, procurement is a big one. And you can find us at our office in Sacramento. We also, once a month, host open office hours in Woodland, Yuba County, and the city of Yuba City as well. So how does it work? Extremely easy to sign up, sacramentovalleySBDC.org. You're going to see that red sign up button. It's a quick 5-minute application portal. At the end of this application, you just schedule an intake interview by phone. Once that's complete, we can get the ball rolling to getting you connected to our SBDC advisors. So we also highly recommend following us on our social media platforms and signing up for our newsletter. If you sign up for our newsletter, you're going to be first to know about upcoming events, networking opportunities, anything that we feel is relevant to the business community. We make sure to add that to our newsletter. We do have a couple of upcoming events and trainings. The Woodland Small Business Financial Management Series. It's a 4-week series. It's going to be hosted by the Woodland Chamber of Commerce. It's basically going to teach you the ins and outs of just understanding finance and how to manage it for your business. And then on 5/8, we have a procurement and capital summit. So you can connect with federal, state, and local agencies for contracting opportunities and also learn how to kind of fund those opportunities. And this is going to be at the MacPal Center in Sacramento, California. You can find out more information on our website. So this is our basic contact information. Our director is Sue Lee Alex. Email is info@sacramentovalleySBDC.org. Phone number is 916-655-2100. And as I mentioned before, the website, sacramentovalleySBDC.org. So with that, I do want to throw it over to SBDC, Sacramento Valley SBDC advisor, Deborah DeBond. Thank you, Deborah.
Thank you. So I'm pleased to be here with you, and I'm going to be talking about bookkeeping. I expect that most of you didn't get into business so that you could learn to do bookkeeping, but it is kind of one of the important tools of the trade. So hopefully this will make it a little less scary sounding and a little easier to get started with if you haven't already started. So, and I guess I should introduce myself a little bit more. I'm Deborah DeBond. I've done a lot of small businesses in my lifetime, and I've also spent quite a bit of time doing what I really love, which is helping other people who want to start businesses or grow small businesses. Let me go ahead and get started with the slides, and then let me share my screen. Okay. Hope you can all see that. So what we're going to cover tonight, we're going to talk a little bit about, really bookkeeping basics and some tools that you can use. And we'll take a minute to look a little deeper at one of those tools, which is QuickBooks Online. And then we will move from there to looking at financial reports. This is the part that probably sounds a little intimidating, but I promise you I'm going to unintimidate it. So to get started, bookkeeping basics. So the first question you probably are asking yourself is, what do I need to keep track of? And the main answer to the question is these top two lines. How much money is coming in from what, and how much is going out and for what? These other things are things that are also good to keep track of, but the main event is these first two. So that's what we'll primarily be focusing on. So what tools can you use? Well, really, there's two things that you need to do. One is collect the data, and that's the really essential thing. And some of the ways that you can do that, the old school method was to gather up all your receipts every time you bought something, stick a receipt in a shoebox, and at the end of the year, shove them to your tax person and get them to sort it out for you. That's maybe not the preferred method. And in fact, I would say an updated version of that old school is that you have a bank account, a separate bank account, and all of your business money goes through that separate bank account. That means all of your expenses come out of that account and all of your business income goes through that account. If you're somebody that wants to use a credit card, then have a separate credit card for your business. So the idea, if you think about it, if 100% of your business money is cycling through a bank account or a bank plus a credit card account, then a lot of your bookkeeping is sort of being taken care of for you through that, right? If you pull in your online banking, you're going to see all of the records of your transactions. It's not a complete record, but it's a good start. So having a separate business bank account is incredibly important and will help you a lot. So some of you may love spreadsheets, and you can do a lot with spreadsheets, and that's a really good tool too for collecting the data. Once you want to use the data, which is sort of the second purpose, then the spreadsheet gets a little bit more complicated because you probably have to do a bunch of calculations to figure out, specific things. And when you are at that point of needing to use the data, that's when you should probably start thinking about accounting software. So let's look a little bit more at software. So I'm going to look tonight at three options, primarily the top two, QuickBooks Online and Wave. And then we'll also briefly go through another QuickBooks product called Solopreneur. So well, let me just jump into these. So QuickBooks Online it's a subscription-based product. It's web and cloud-based, so you can access it from any device. And QuickBooks is a program that has been around for many years. Initially, they had, old school kind of software that you downloaded onto your computer. But they came up with this online product, really building it on a whole different foundation because they recognized the power of that online banking stuff I was telling you about. So it's built on a foundation that uses online banking to capture that information. And we'll talk about that a little bit more in a second. They also have integrated it with a lot of online sales platforms. So if you're using like Square or, one of those, then you can probably integrate and have some sort of integration between that, bringing that data in to QuickBooks. So QuickBooks has the lion's share of the market. I think it's like 85% or something like that of the small business market. So because of that, it's really easy to find assistance with QuickBooks. Like if you are going to work with an accountant or a bookkeeper, you'll have no trouble at all finding one that uses QuickBooks. Probably pretty much all of them do. And if you are trying to learn it, there's tons and tons of resources to learn QuickBooks just because it's the behemoth in the market. And, the downside of the monthly subscription is that they do, raise their rates from time to time. But some accountants do offer discounted rates. So if you are working regularly with an accountant, you might just ask them if they offer discounted rates for QuickBooks. So here is a screen capture of portion of the QuickBooks like homepage. So you can see a bunch of menus over here on the left, and then they have this data, so they just generate these colorful graphs and things to help you see where you are at the moment. Then I wanted to talk a little bit about Wave. So the main reason I'm talking about Wave is that they were free. They still do have a free program, completely free. You can go to their website and just sign up and take a look at it for yourself. They are very similar to QuickBooks in the way that they're put together. It's a web and cloud-based kind of system, accessible from computers or smartphones. They are quite new. It comes out of Toronto, Canada, but they were purchased by H&R Block in 2019. So it was free until January of last year of 2024. And then all of a sudden it went to being $16 a month. They do still have a free version, but it doesn't include this automatic connection to your bank to pull in your numbers into the system. You can still manually pull, you can log into your online banking, pull up a list of transactions that would be the transactions since you last pulled them into QuickBooks, save that as a particular kind of file, and then you can upload that into Wave. So if you're willing to go through that, at that point, you end up pretty much the same place you would be if you paid that $16 a month. So the free one is still available. So I want to go ahead and talk about this a bit. But the difference between QuickBooks and Wave, among other things, is that QuickBooks is so built out and Wave is really quite basic. So it's kind of like if you were a mechanic and you had a toolbox that had 6 different Phillips head screwdrivers for different size jobs and 4 hammers for different size jobs, that would be the QuickBooks version of the toolbox. But if you were the Wave version of the toolbox, you would have 1 Phillips head, 1 regular, 1 hammer, and you would just adapt yourself to using those basic tools. That's kind of the way Wave is. Because it's a much, much smaller market share, it's not as easy to find support. You might struggle to find an accountant that would be able to help you with it. And it's not as easy to find support as you're learning it, but it's still possible. It's gotten a little better since H&R Block bought it. There's some online tools and so forth. But I have a few clients that I've worked with that have really small businesses, and they've been pretty happy with it. So it's an option you can look at. And this is like the home screen for Wave. So you can see they've got menus over here on the left. And yeah, it does pretty much work the same way as QuickBooks does. So the pricing. So here you can see wave pricing. They'll also give you a little discount if you pay annually. I think you pay up front for the year, then it's a little less than $16 a month. So QuickBooks over here, they have tiered pricing. The one that I would highly recommend that you use is the Simple Start. They cover pretty much the basics for most small businesses in there. And at least start with it. If you discover there's something you need that's in Plus, then it's super easy to upgrade. You just basically go into QuickBooks and tell it, yes, I want to upgrade, and that's all there is to it. So start with Simple Start. Some of their advertising I feel is a little deceptive, especially this in their pricing. It says $17.50 per month. That's because they give you 3 months at half price, and then the real price for the rest of the time you're working with them is $35 a month. So that's why I've circled this $35 a month in red. So it definitely is more than Wave, and it may go up in the future. I mean, it will go up in the future. Usually they have a price increase every 2 or 3 years. So I wanted to mention this other product as well. It's another QuickBooks product, and it's called Solopreneur. This is a new and revised version of something that was called QuickBooks Self-Employed that's been around for a little while. I understand there's some fairly major changes to it, so I'm not super familiar with it yet, but I am fairly familiar with QuickBooks Self-Employed, and I think Solopreneur is pretty much the same. If you are a small service business, you're not selling stuff. If you're a service business and you don't have employees and you don't have consultants, this would be something that you might want to consider. Oh, and you expect to stay that way. If you're on a growth trajectory, I would suggest maybe going straight to QuickBooks Online. It's smaller and simpler than QuickBooks Online, Solopreneur. And it's focused on what you need to pay your taxes. So QuickBooks Online is more focused on traditional financial reports that show you a whole range of things, and you can pull out the information you need for your taxes. I think when they built this product, they were really tailoring it to, like, Uber and Lyft drivers and people that are not really thinking of themselves so much as a business as just sort of, solopreneurs, I guess. And so they figured, well, they don't need all those management reports. Everything's about taxes. So that's like the reports are really focused on taxes, which you need to know about, where your business stands in terms of taxes at the end of the year. It's cloud and web-based, accessible from any device. Really, it's, I think, mostly set up for the phone. It's also built on a foundation of bank fees, monthly subscriptions. Right now, it's $20 a month. I will say a couple of things. One is that it's not an easy transition to QuickBooks Online. So you might think, oh, let me start with this, and then I'll go to QuickBooks Online later and port my data over. Don't assume you'll be able to port your data over. They may make that easier, but because it really is built on a different foundation, I think porting that data is not so easy. So I had a client a couple years back that she had kind of graduated beyond self-employed that she'd been using for about 4 years, and she wanted help getting things moved into QuickBooks Online and learning QuickBooks Online. And oh boy, QuickBooks said that they ported her data over and it was just a grand mess. And we ended up having to, basically, we stopped her QuickBooks Online subscription so that we could get rid of all that mess and just start it fresh. So that's something to consider when you're looking at that option. So going now into looking a little bit deeper at QuickBooks, when you first sign up with QuickBooks then it's going to ask you a bunch of questions about your business. So what's going on here is it's trying to understand enough about your business to set up what it calls a chart of accounts. It's going to like give you kind of a canned chart of accounts. It's sort of generic, but tailored a bit to your business. So you may be asking, what the heck is a chart of accounts? And that's an accounting term for just the list of categories that you're going to use for managing your money. So let's just say I have this little ice cream business. So I have my income, and down here I've got my expenses, and in between I have my cost of goods sold. So my income, I have an ice cream stand, but I also cater birthday parties. So if I want to know how much of my income is coming from which of those two sort of streams of business. So I have two different income categories, right? So that's going to help me manage my business. Then my cost of goods sold, and you're going, what's cost of goods sold? Also known as COGS. So that is another accounting term. And if you're a service business, meaning you don't sell stuff, then you probably don't have to even think about it. But if you make things or if you buy things and resell them, then you're going to have cost of goods sold. And this is just a special category of expenses that is for all the costs that go directly into the products that you're selling. So in my ice cream business, it's going to be my ice cream, my cones, my sprinkles, my nuts, whatever's going into that product I'm giving the customer. Plus, it says here packaging, my little wraps that I give the customer and the napkin that I give them. That's all cost of goods sold because so what's happening is it's going to give me a chance to see the total cost for what I'm making or what I'm buying and then selling. And when I look at a report, I'm going to see all my money in, and then I'm going to see all the money that went out for cost of goods sold. And then I'm going to see, like in this spot right here, I'm going to see a subtotal, a kind of preliminary profit. So I got 500 in this week, and I spent 300 on cost of goods sold. So my preliminary profit is 200. And then all of the other expenses that just keep my business going, those are going to be in yet another list down here. So then if that's 100, then I know the remaining 200 minus 100, I've got 100 profit that week. And we'll look at those report kinds of things a little bit more in a minute, but I wanted to call out that cost of goods sold. So, oops, sorry. So back to this screen. So now when you get this canned chart of accounts, kind of best practices when you're setting up QuickBooks, or the same would be true for Wave, is to get in there and make sure that that chart of accounts or list of categories is what you want and need. Now, QuickBooks will give you everything but the kitchen sink. It's going to give you a ton of categories. And some of them, it makes a really long list and it's hard to find things. If there's things that you're never going to use, you can go into, I don't know if you can see this little next to where it says run report on the right of this little white screen here. There's a little like down triangle thing that if you access that, it'll give you an opportunity to edit or to hide. You can't delete a category once it's in there, but you can hide it and then you won't see it on your list. So you can get that list so it's not so overwhelming. You can also, if there's things you want that aren't in here, there's also a way to add. So you can make that list really your own. I think that that's true. I'm sure it's true in Wave as well. It's not true in Solopreneur. Solopreneur, they give you a list. That's what you got to live with. So it's great to do this first if you're up for it, because then when you start getting the information from your bank feed, it's going to go into these categories as opposed to the random categories that QuickBooks gave you. So moving on to the business bank account. So then the next thing you want to do is you want to hook up your business bank account, credit card if you've got it. And so it would be from a screen that looks like this. If you're at one of these banks, you can click on that. If you're not, you can just enter your bank up here. Basically, it's going to ask you for, your account number, and then it's going to ask for your permission to go online and get the information you would see if you did online banking. And so you're going to need to give them your login, both your password and your username. And then once it has your permission, it's going to send its little electronic fingers out to pull in that information, like every time you open the app, or periodically if you have it open, it'll update that information. So what that means is all that information that you would see if you did online banking is going to be brought into your QuickBooks app. And so this is the screen that it brings it into. So up here we see this blue part that says checking. This is showing us that what we're looking at is the checking account. To the right of that is savings and MasterCard grayed out. If you click on one of those, it'll turn blue and you'll be looking at that screen. And the 25 here in orange on checking, that's showing us that we have 25 transactions that have been brought in that we need to deal with. Savings has just 1 and MasterCard has 7. So I'm not going to go into this much now because I'm going to take you into QuickBooks and where we can, look at it a little bit more closely. So QuickBooks has this thing called Online Test Drive. I don't believe they have it for the Solopreneur product, but they do have it for their QuickBooks Online product. So you can use this link. Wave, like I said, you can just go and open a free account if you want to explore that a little bit. And what I'm going to do is bring a different screen up here. Okay, do you guys now see a website screen?
Yes.
Okay, great. So this is the screen that you will get if you Google QuickBooks Online Test Drive and select what comes up. And right here is the one you want. They give you this one as well. This is advanced. This is their top of the line product. So it's going to have a lot of stuff you're not going to see when you use the Simple Start. This one is the middle product. So it also has a few things you won't see, but it's pretty similar to Simple Start. So we'll do this. We have to tell it we're not a robot. And then it's going to bring up QuickBooks Online. So they have like a fake company in here, and they've populated it with a bit of data. So it gives you a chance to go in and kind of explore a little bit. So here is that dashboard screen, and it's being a little slow. It's always a little slow when I'm using Zoom. They have this customized layout thing here that allows you to, it's still pulling up, but it allows you to customize these widgets. So that's something you can play with if you want. And it has a bunch of menus here. This is additional menus. There we go. Over here, this is menus. And then each of these is menus. But where I wanted to take us first is bank transactions. That's where we were on that last slide. It's going to give us a bunch of, they give you a bunch of things meant to be helpful when you're first starting up. So I'll click through those. So this is like that screen we were looking at a minute ago. So let's just look at this one. So this one, it just brought in, and it knows that it received $55. It knows it's received. And you know, when you go and you look at like your online banking or your credit card statement, and it's got that string of letters and numbers and stuff that's kind of maybe has a Amazon or something in there that you can pick out. It oftentimes you'll see that in a description. If it doesn't know what else to put, it'll put that. But if it can pull like Amazon or something out of there and it knows that's a payee, or it gets us that's the payee, then that's what it'll do. It'll stick it in here, payee or payer. Otherwise, it's something that you can fill in yourself. But here, it knew it was Books by Bessie, but it had no idea what type of income it was. So it put it in this category, uncategorized income, which means you have to tell it what income it is. So what I'm going to do is I'm going to click here, and it's going to drop down into this screen that has more information. So here's where you could change vendors if the vendor was wrong, or here, the account. So remember how I said that QuickBooks calls it a chart of accounts, and we would call it a list of categories. We would call this the category. QuickBooks is calling it the account because that's what accountants call it. But anyway, the account or category. So let's just say that I provided some services to Books by Bessie, and that's why they paid me. So that's all I need to do. These are some optional things that you can use if you want. I can put a memo in here if I wanted. This was the second job, whatever, you know. If you are, this is going to be true for both income and expenses. On the expenses, maybe you have a receipt that you want to add. You can snap a picture with your phone and download the receipt here. They have rules. So QuickBooks is going to use machine learning. And the more you do this, the more it's going to understand, oh, Books by Bessie is always, it's always services. So when next time you sees something by Books by Bessie, it's not going to say uncategorized income, and it's going to say service income. It's going to make that guess. You can set it up so you don't have to see it and it goes directly into QuickBooks. I would highly recommend that you don't do that, that you still make yourself look at every single one, because QuickBooks makes mistakes and you make mistakes too. You know, I had a client that said, oh, every time I go to Costco, it's for office supplies, but she forgot that she also goes to Costco for gas, and that was ending up on her business credit card. So it was being miscategorized, and she didn't realize it because she had it going directly into her QuickBooks. So anyway, I'm getting a little bit off track, because what I want to show you here is once you have this set, then you click add, and then poof, it goes away. See, it's not here anymore. So it's gone. When it comes in here from your bank feed, it's in like a temporary holding cell. And once you push that add, which if it had the correct category here, then you could just push add from here, then it would disappear from the screen and go into your records. So, any questions about this? Let me go on then. So these menus, there's invoices if your business creates, invoices or bills for your client that will be paid later. You can do that from QuickBooks if you want. You can do estimates, expenses. You can capture if you're capturing your vendors, then you can do searches to see what has happened. Let's see. Well, there may not be. Yeah, here we go. So this is showing all the transactions with Bob's Burger Joint. And we're going to talk about reports in a minute. Payroll is an add-on, time is an add-on, but this is, if you do have a point where your business is having a payroll and you are shopping around for payroll services, one option is QuickBooks. If you have to have employees that are tracking their time, that I believe it's still an add-on, but you can do it through QuickBooks, et cetera, et cetera. I will say there's a lot of, some of these things are like upsell kind of things. There's a lot of add-ons that QuickBooks is always eager to sell you that that you don't necessarily, I mean, you can look at them, but make sure and price them against others in the market because it's not always the best deal. So anyway, that's kind of a quick tour of QuickBooks Online. So now let me get rid of that and go back to our slides. So I said in the beginning that you can collect the data, but then you need to be able to use the data. And in your bookkeeping software, to use the data, you'll access it through reports. So you may be asking, well, why do I need reports? Why do I need that data? So answer number one is tax purposes, right? At the end of the year, you're going to have to do, if you're a sole proprietor or a single member LLC, you're going to be filing a Schedule C with your tax returns that's going to capture all the information about your business. If you're a partnership or a partner LLC or a S Corp or something like that, each of them have different forms, but it's basically the same thing. So if it's a Schedule C, this is what it looks like. The income, your total income is going to go here on line 1. On line 4, you have your cost of goods sold. Then you'll take your income, subtract your cost of goods sold for that preliminary profit called gross income. Then down here in part 2, you see they have these categories. That's the way the taxman wants to know how you're spending your business expenses. So you're going to need to have something to give you that information. So if you have reports, they should be able to do that. Answer number 2 is management purposes. So these are just a few of the questions that you might have that reports are going to be able to help you to answer. And as you might imagine, when you're small, you maybe don't need them so much, but as you grow, it becomes all the more important. So that brings me to the end of the first part about bookkeeping. And now I really want to dig a little deeper into the financial reports. So this is a good time to check in again about questions. Does anyone have any questions? Let's dig on in on this then. So I'm going to start very basic, right? And talk about 2 reports that I want you to know about, the 2 main reports. And the first one is called a profit and loss report. And it's going to record basically your money in and out. So going back to my ice cream business, I'm just going to record in a spreadsheet. So on Monday, I had sales of $560. On Tuesday, I had sales of $320, but I also went and bought ingredients for $610. And then on Wednesday, I had to pay my QuickBooks subscription, and I also had some sales. And then on Thursday, I bought some printer ink. And then on Friday, well, before I get to Friday, let's just look here. So Thursday night, I was like, okay, how much money have I made? So this week, I add this up, I've made $1,280 and I spent $730. So I can do the math, right? 1280 minus 730 is 550. So I know that I made 550 profit in these 4 days. And just FYI, another little accounting thing, putting numbers in parentheses is like a negative. So I'm saying 1,280 minus 730 is 550. And you'll see those parentheses when you're looking at reports in QuickBooks or Wave. So now let's just say that I'm keeping it in QuickBooks. This is what it's going to look like. So it's going to show over here on the right in the kind of yellow color, the sales is just going to be a single number. And in QuickBooks, I'm not sure about Wave, but in QuickBooks, if I go, 1280, how did I get 1280? I can double click on this and it'll pop up another report that'll show me all the details. So it would show me the sales on Monday, Tuesday, Wednesday, etc. And the same with the cost of goods sold. So it's got my total sales minus my cost of goods sold, my gross profit, that preliminary profit, and then the expenses that I need to keep my business going, and then totals them. 670 minus 120 is 550. The same thing in slightly different format, right? So a lot of clients that I'm working with, they go, oh yeah, okay, profit and loss, that's good. But when it becomes interesting to them and when they start to see the value of this report is when they see profit and loss by month. So this is something you can do in QuickBooks. You can't do it in Wave, unfortunately, but QuickBooks allows you can do a profit and loss by month. Or maybe if I was just looking at my week for my little ice cream, I could do a profit or loss by day, and it would show each individual thing. If you've been keeping QuickBooks for a few years, you can do a profit and loss by year. And I hope you can see how this starts being interesting, because you can see, oh, what were the months that I did the best? When were my revenues the highest? And then if you need to double click on this and dig down into more details, then it's right there for you. When were my expenses the highest? Why did I make a loss this month when I had, you can get into details that can start really giving you some information that will help your business. Okay, so on to another topic now, because on Friday, I did what I've been wanting to do for a really long time. So my business, I'm struggling with trying to fit everything into my little tiny car, and I desperately need a van so that I can take my stand around, so that I can cater larger parties. And so I've finally done it. I saved a bunch of money and I went and bought this used van for $16,500. I'm super excited. But look what it did to my numbers. Now my profit is just completely obliterated. I've got a loss of almost $16,000. I mean, at the end of the year, I'm going to be showing a loss for my little business. But if you think about it, this van is really quite different from these ingredients and the QuickBooks subscription and the printer ink. Like these things, they come, they go, they come in and they're expended, right? They're not sticking around. But this van, it's different. It's like an investment, right? If I decided I wanted to sell that van tomorrow, maybe I wouldn't get 16.5, but I'd probably get, 16. It's something of value that my business has invested in and that it's in my business. So we really need another report to get the full picture of our business, because we need to know not only what's coming and going, but we need to know what's in the business. So what is the value of what's in my business? And so if I have that vehicle and it's, Kelly Blue Book is 16.5, or that's what I just paid for it. So that's something of value in my business. My bank accounts, the balance in my bank accounts is something of value in my business. And then also, I've got a credit card that's got a balance, and maybe I just got a little loan from the SBA that I have to pay back. So it's not just what I have, but there's also sort of this negative to what I have, right? So all of that needs to be understood. And thus we have what's called a balance sheet. So I'm going to try to walk you through balance sheet. And I'll say that, I'm not somebody that went to school to learn accounting. I learned it as a business person, sort of self-taught. And I first was pretty intimidated by the balance sheet and found it a little hard to wrap my head around. So I like to use this story to help explain it. So let's say that you've got your old Uncle Edward, and Uncle Edward is getting up there in years, and he's having a hard time like managing his finances. So every month you go over and you hang out with Uncle Edward and you help him put his finances in order. So you look at his money in during the past month and his money out during the past month. And then if you get the total in and you subtract the total out, then you can figure out, he's kind of keeping on his budget, or, oh, he's getting beyond his budget. That's kind of like old Uncle Edward's profit and loss, right? His money in minus his money out. But now you just got the shocking news that old Uncle Edward has passed. And you're just starting to recover from that shock, and you find out he's left everything to you. So now you're trying to figure out, what does that mean? I know he owns a house and I know he has a car, but I know he's also maybe in debt. So what does that all mean? So think for a minute about how would you go about figuring out how much you're going to get from this, or maybe how much you have to pay for this. So one way you might do it is you might first start thinking about everything he has. So you can see what is the total in his bank accounts. You can get his house appraised. You can do a Kelley Blue Book on his car. You can find out who owes him money. And then you can add all that stuff up and find out the total amount he owns, even though some of this house is actually in a house note, it's in a mortgage. So then you also have to do how much is owed. So it owes $3,000 on credit cards. You're going to have to pay $500 in bills. Here's the mortgage. This is the amount of the house that's in the hands of the mortgage company. So you're going to when you sell the house, you're going to have to pay them off. When you sell the car, you're going to have to pay off the car note. But if you do the total owned minus the total owed, and you do that math, then you're going to find out more or less what you could expect to have once you take care of like liquidating all of this, right? Does that make sense? Any questions on that? And that would be like Uncle Edward's balance sheet. That's showing his kind of his net worth, right? Mm-hmm. What he has minus what he owes. So we have two.
I just want to say really quickly, Deborah,
Yes.
I really appreciated that breakdown. I think that's a really interesting way to look at it. Like you were saying, it's a much simpler way to understand your balance sheets, but also, I don't have too much experience with QuickBooks, but at some point in my former job, I assisted a little bit our accountant. And so I remember QuickBooks was just so overwhelming, like all of the different tabs, everything that you had to do. But, it's bringing me back to that, but also it's just so helpful to just learn how to navigate that. So yeah, I'm definitely learning a lot, and I'm sure the folks on the call are taking a lot from this as well.
Oh, thank you. Thank you so much. I appreciate that. Yeah, it comes from having struggled myself, and I know how hard it is because accounting is sort of this whole other world with its whole other vocabulary, and some of the thinking is kind of counterintuitive to those of us who aren't accountants. So yeah, so I'm trying to figure out ways to make it connect to our worlds. So you have these two reports that are kind of the two most important financial reports. And one is the profit and loss report, and it's also called a P&L for short, and it's also called an income statement. All those are referring to the exact same thing. And the thing is, it's kind of like you can think of it like a little video, because it's always got a start point and an end point. It's recording the activity of a period of time. So it's going to show the income and expenses for that period of time. And it shows how much came in through which categories of income, how much you spent on which categories of expenses, and then the bottom line, right? Is it a profit or a loss for that period? And you can get a P&L for any period of time, month, year, day, couple of hours. You specify and you can pull that report in your software. The balance sheet, on the other hand, is like a snapshot. It's not for a period, it's for a moment. The moment that you pull that balance sheet, it's going to show you what your business owns and how much the dollar value is, what your business owes, and what's the dollar value of that. And then 5 minutes later, you do another transaction, it's going to be a different balance sheet. It's just capturing that moment. And it's a cumulative kind of thing. So when it's showing you, certain things like that's taking you too into the weeds at this point. Let me show you that later. So there's a couple other things that it can show you that can be useful, like if you're recording properly, when you personally invest in the business or you pull money out of the business, that's also something that can be seen on the balance sheet. And it shows you what your business is worth. So that is the balance sheet. So let's look a little deeper into the balance sheet. So there's going to be 3 categories in the balance sheet. And the first one is called assets. And this is what you own, with the stuff your business has. So it's going to be things like your bank accounts and accounts receivable. That's another accounting term, but that just means that you've billed somebody, you've invoiced them, and you're waiting for them to pay. So you already did the work. It's like an IOU, right? They owe you that money. So right now, that's something your business has. It has that $500 of bill that you're waiting to have paid. So if you invoice within QuickBooks, then it's going to, let's say I just did a $1,000 invoice in QuickBooks. When I look at my balance sheet, I'm going to see that $1,000 in accounts receivable. When my client pays that $1,000, then I show it as paid in QuickBooks, and bang, it's gone from the assets. It's no longer an asset because now it's money in the bank. Well, it is an asset as money in the bank, but it's not as accounts receivable. And then there's other current assets. Inventory would be an example of that if you keep your inventory in QuickBooks, which I don't necessarily recommend. And then fixed assets, that's going to be big things that you probably have for a period of time, like that vehicle or equipment, big equipment, not a, $800 computer, but big equipment. And what the assets part of your balance sheet is going to look like is something like this. This is a fairly simplified asset section of a balance sheet. So if I have both a checking and a savings account, it'll have those listed out separately. It'll have the total of my account receivable. I can drill down and see more by double clicking. It'll have my inventory, and then these are the fixed assets. So that's what my business has. Now let's look at what my business owes, which is called liabilities. And so what my business owes is going to be my accounts payable. So if let's say I just got $5,000 worth of website work done, but they allow me to pay it in 2 installments. So I could put that 5,000 in here in accounts payable, and I could, when I pay the first installment, then it'll go down by that installment. And when I pay the final installment, it'll go away. But it'll have the credit card balance if you have a business credit card in QuickBooks. And then it's got, notice how it's called current liabilities and long-term liabilities, more accounting stuff. And really all that is, short-term liabilities are like revolving things like a credit card or loans that are payable within 1 year. Anything that's payable in longer than a year will be long-term liabilities. And that's going to look something like this. So notice the total liabilities here. Now we're getting to the final section, which is the equity. So it's kind of that Uncle Edward equation. What your business has minus what your business owes is what your business is worth, which is the equity. So this black equation is that, right? Assets minus liabilities equals equity. That makes sense, right? When I started doing accounting, it was like, what the heck? They say, you know, there's this like a big thing in accounting, assets equals liabilities plus equity. I never understood it. Like, okay, I'll memorize it. I'll take your word for it. I don't understand it. Until I realized this is just a restating of the mathematical equation. Like if your assets are 5 and your liabilities are 3, then your equity is 2. 5 minus 3 is 2. 5 equals 3 plus 2. It's just very simple math stated in a different way. So I'll show you in a minute why accountants want to do it that way. But for right now, take my word for it, because I want to look at some subcategories you're going to see, especially if you're in QuickBooks or a software program. You're going to see these subcategories of equity. So let's just go through these. Opening balance equity. When you hook up your bank account and maybe your credit card account to QuickBooks, it's going to find some kind of balance in there, right? So let's just say you had 500 in your bank account when you started. QuickBooks is like, what am I going to do with that $500? It's not income. It's money that's in the business. So we're going to just call it opening balance equity. And maybe I have a $400 credit card balance. So that's going to be a minus 400 in opening balance equity. So that's generally, there's a few other things that'll book to opening balance equity, but generally that's what it is. Then you'll see something, and if you're a sole prop or a single member LLC, I think they call it owner's investment. It's a little different. Like if you're a corporation, then it would be it would be, these come with different names. I'm blanking on it now. So these names change a little bit, but it's personal money you've paid into the business. It's your investment into the business. So let's think about this for a second. You are just getting started with a business and you're putting like $800 into your business today. So when it hits your checking account and you're categorizing it, if you categorize that as income, then you're going to get taxed on it. You don't want to do that, right? It's not really income. It's you as the owner. You own this business, but you're choosing to put $800 of your personal money into the equity of the business, into the net worth of the business. So when you hit that $800, when you're categorizing, remember what I'm saying, ding, ding. Do not count that as income. Count it as equity. And you should have a category that's called something like owner's investments. And by the same token, when you're pulling money out of the business for your personal use, like paying yourself, unless you're an S corporation or you have S corporation taxation, you're not paying yourself by payroll. You are just pulling some money out of the equity of your business. So that should be categorized also in the equity section as an owner's draw or shareholder distribution. It's like got these different names. So those are a couple important ones I like to point out. Let me drop down here to this bottom one, net income. At that moment, when I went into QuickBooks and pulled this balance sheet, it ran over and it grabbed this year's profit or loss. That's profit and loss we were looking at before. Let's say it was $4,220.15. That's going to be what shows up here as net income. On December 31st, at midnight, this is going to poof, go up here into retained earnings. Retained earnings is the profit and loss cumulative from all your past years since you've been keeping records in QuickBooks. So poof, it's going to go up into retained earnings and be added to the prior year's retained earnings or subtracted if it's a loss. And your new net income as of the first minute of January 1 of a new year is going to be 0. And then as soon as you start having transactions, it's going to pop in here. So those are just a few of the most common categories in equity. And so the equity section of your business, of your balance sheet is going to look like this. And remember how I said that the parentheses mean negative? So here, owner's draw is generally going to be negative because it's the money you've pulled out, whereas owner's investment is a positive because it's the money you've put in. So this is where you would look on your balance sheet to see, I've been doing this business for 4 years now. How much have I put in over 4 years? And you would be able to see that here. Or how much have I put in? How much have I taken out? So now let's put it all together. So when you're in QuickBooks or in Wave and you pull a balance sheet, it's going to look something like this. It's going to have a section at the top called assets and your total assets. And then it's going to have a section at the bottom called liabilities and equity. And it'll have a subsection for liabilities with its total, a subsection for equity with its total. Now here's why they call it a balance sheet. The total assets is always going to equal the total liabilities and equity. It used to be when accountants did this by hand, they would have a column for the assets on the right and a column for the liabilities and equity on the left, and then it would balance out. Each of those columns had to be in balance. You don't have to worry about that like the old time accountants did, because QuickBooks is going to help take care of that for you. It's going to be figuring that stuff out behind the scenes. But what you can know is that the assets always equals the liability and equity because of this same mathematical equation that we talked about earlier. If this is 5 and this is 3, then this is 2. And this is all part of what they call double entry accounting or double entry bookkeeping. And what that means is that every time you have a transaction, every one of those transactions that you accept into QuickBooks, that is actually something that has 2 sides. So what do I mean by that? Let's just say I bought some supplies for $50. So $50 came out of my checking account. So $50, it was minus 50 here and minus 50 here. And down here, the other part of that transaction was an expense. That was an expense for office supplies. So that's going to show up on my profit and loss. So if you think of that profit and loss, it's going to go down by $5, right? My total earnings is going to go down by $5 because I just spent $5. And so this is going to go down by, I said 55, whatever. It's going to go down by the amount of my purchase, and this is going to go down by the amount of purchase. It's in sync. Any transaction you can think of. Let's say I paid my credit card with my checking account. This will go down, and my credit card will go down. And so it's always going to hit two different accounts, as the accountants say, categories, as you and I would say. So any questions on that? So how the balance sheet helps you. For one thing, it can help you if you keep track of it.
No, not yet. I apologize.
Viga, did you have a question?
No, ma'am. No, I'm getting a lot out of it. I still got to process it before I will be able to go ahead and ask what I need to. I apologize. Please forgive me. Proceed.
No problem, no problem. So, so I would recommend, so these are some best practices in bookkeeping. First of all, is you at the end of every month or at some point that you set up for yourself and keep on top of. One thing with bookkeeping, you got to figure out what's going to work for you to keep on top of it, because that's really important. It's great to have QuickBooks, but if you don't keep on top of it, then you're just going to, at the end of the year, you're going to, oh, I can't, I'm overwhelmed. You got to keep up with it. So I would recommend like setting a schedule for yourself and whatever works for you once a week, every other day, go in and keep up with those transactions, and then have a special thing that you do at the end of the month. Bookkeepers call it closing the month. And go and, first of all, make sure that all your transactions are up to date. And then there's something called a bank reconciliation that you can do within the program that will allow you to make sure it'll actually give you a chance to compare your bank statement to everything that you have in QuickBooks, or your credit card statement to what you have in QuickBooks, and make sure that they sync up. Because if you made a mistake, they won't sync up, and that means you've got to find that mistake and fix it. And that is what's going to give you a solid, good set of numbers. So do your credit card and your bank reconciliations, and then also run that profit and loss report for the month and just look and give it the eyeball and go, what is this? $450 in this category, and then drill down and look, and it's like, oh shoot, that got miscategorized. That's when you catch that stuff and take care of it. And I have spent a lot of time working with clients who never paid any attention to their balance sheet until one day they needed it. They needed it because they were trying to get a loan and their loan officer asked for it, or something like that. Maybe they were going to sell their business. And all of a sudden, they looked at this balance sheet and it was just a terrible mess because they'd never paid attention to it. And, you make mistakes when you're categorizing, especially if you aren't, you're moving quickly. And there's certain things, QuickBooks will categorize things as uncategorized assets, and they should be income or they should be expenses. And for years, it's been going into uncategorized assets. There's other things like that that tend to happen. So keep an eye on that balance sheet and make sure you understand it and understand what's going on and that things make sense. And every month when you look at your P&L, also look at your balance sheet and make sure that things are categorized correctly in there. And then it's a place where you can quickly look to track your balances, to track unpaid invoices and bills. It's a good place to look for seeing how much you've taken out, how much you've put in of your personal money. And then there's certain ratios, like the reason that a lender is going to look at it is they want to understand the state of your business. So that's going to tell them a lot. And there's certain ratios that businesses use, like your debt to your assets. If you've got more debt than assets, then that could be problematic. So you can look at those ratios. And then the net worth of the business, to kind of track the net worth of the business. So in summary, collecting the data is essential. Whatever you do, don't fail to collect the data. Collect it all, however you do it. If you have the data, then you can go back and repair later and, spend time collecting it into a software program or a spreadsheet or something to get what you need at tax time and so forth. But if you're going to be able to use that data, the best practices are going to be to do it in the software, keep on top of it, and be able to use those reports to grow your business and understand your business. And as far as bookkeeping, there are multiple options on the market. Because of QuickBooks, I think it's like 85% of the market that they have of the small business market. So there's some advantages. I'll be honest with you, I'm not a huge fan of Intuit. I think they are kind of a money sucking whatever, but they have a good product. The profit and loss statement helps you track your income, expenses, and profit and loss for whatever period of time you choose. And the balance sheet gives you a snapshot of what your business owns, what it owes, and its net worth at the point when you pull the report. So, any questions now?
Are there any questions from the participants?
No, not at the moment from me. I have processed this here. QuickBooks. Okay, I'm gonna jump to QuickBooks. I must say, I actually used TaxSlayer this year, and I'm gonna jump to Tech QuickBooks. And yeah, so it's a lot more. Seem like user friendly as well. Where she's breaking it down. This is great. I do thank you. I swear, I really do.
Oh, I'm so glad. Thank you. Thank you for saying that.
Thanks, Miguel. Yeah. Jesse or Mo, do either of you have any questions for Deborah?
No. Yeah, I understand, even though I'm not the one who is like entering all the information, because I have somebody who helped me in my store, but I have some knowledge about it, and it totally makes sense what she said. So yeah, I totally appreciate it. The only thing is sometimes it's because of time. I don't have the time
Yeah,
to do all those
course.
entering.
Yeah.
But yeah. Thank you so much.
Oh, you're so welcome.
Thanks, Jesse. And then Mo, I see you unmuted yourself.
Oh yeah, I don't have any questions. I just wanted to say, no, I really did appreciate the presentation. And I wanted to chime in when you were saying, like, yes, QuickBooks can be really overwhelming. So I also appreciated the fact that you kind of went over that, because that's part of the reason why well, there's a lot of reasons why I don't use QuickBooks, but that was definitely one of the reasons.
Yeah, it's got so much to it that it can be overwhelming, but all you need to really focus on in the beginning is getting that, doing that categorization. That's really the important thing. And then as you grow and you get more comfortable with QuickBooks, then you can start exploring some of those other features. But it's really that categorization that's the most important thing.
Yeah, definitely. Thank you.
You bet. You bet.
Well, thank you so much, Deborah. I really appreciate all that you shared this evening, but also I think that just the reminder of making sure that whatever system you're using, that you're checking it more regularly, right? Which I can't imagine for a business owner, that's really hard, especially when you're managing a lot of different things. And it's probably just you're doing it on your own, but if you're able to get support, I mean, that's always great. And certainly I think it's such an important part because of the other things that you brought up, right? And for tax purposes, whenever you're going after loans, I mean, these are just really fundamental things for your business. And to also see, like, and I know a lot of the business owners that we've spoken to, like, obviously through the different sales that you have throughout your months, which ones are which months are better than others, but just physically, I think, but just really being able to visualize it on a spreadsheet, I think is always helpful too, to really see how much is it that, your profit versus your loss per month and throughout the year, being able to compare that and look at that over the years.
Yeah. Yeah, and that's the good thing about when you're using these products, then the years start accumulating and then you get to learn even more and more. So yeah. Yeah,
Awesome.
and I'm a consultant at SBDC, so if you felt like you needed a little bit more help, you can reach out to them. I think
Yeah.
you saw what Joseph sent. I've got the website here again, and you can request to work with me. So.
Oh, that's awesome. Thank you so much for bringing that up again, and Deborah, because that is so great. So if anybody on this call has, any questions or or even the folks that are going to see this recording after, if you want to get connected to Deborah to really to help you navigate QuickBooks and dig deeper into a couple of other things around your business finances, there's the SBDC. There's a lot of really great coaches and I think opportunities and additional small business workshops that are completely free to our small business owners. So please get connected. And then there is some information that's going to go out to each of you so that you can register if you're not already registered as well.
Yes, I am. As a matter of fact, Mrs. Margaret Jackson is my advisor right now. So
Oh,
yeah.
okay.
A 9-step. I think I'm in that 9-step program as we speak. So.
Oh, wow. That's
Mhm.
great.
Yeah, I'm moving along. God willing. Yes, ma'am. I'm moving along.
That's
But this is
awesome.
definitely informational because in my field of construction, being a
Mm,
baby in it can get tedious, real
Yeah.
quick. And
Yeah.
underbid or something like that, and being accountable for all of the goods that have to go in
mhm,
to what has to be done on my job, and then change orders and different things like that
mhm.
in the low voltage electrical industry. So it fluctuates swiftly. So yeah. So definitely informative again for me. Thank you. And I'm Ziggy. I own ZVH Technologies. I had to do this from my my phone. I didn't get on my laptop. I apologize.
Yeah. Thanks, Sigal. Okay, awesome. And then I see Jesse's unmuted, but I don't know if Jesse, you wanted to add anything else.
I just would like to just to get her help.
Yeah.
Do I need to register in the you said in the SBDC, right? And ask
Yes.
for for Deborah, the name of her, or they gonna pick whoever is available?
That's a great question, Jesse. I think Deborah said you can request her, right? When you register and you do your intake form. I think when SBDC reaches out to you, which I'll be sharing that contact information with you, Jesse, of how to register. And I know Joseph also I think you mentioned that in the beginning of how to do that process.
Yeah.
Yeah.
No, definitely. So the first step, Jesse, is just get on the website, sacramentovalleySBDC.org, and then you click that red sign up button. It's a quick 5-minute application portal. And then the final step, you schedule an intake interview by phone with our intake team, and just let them know during that interview that you'd like to work with Deborah, and that'll go within your notes, within your client profile. And so when our director's reviewing the notes, she can say, oh, she wants to work with Deborah, and we can make that connection happen.
Yeah. Okay. Sounds good. All right. Perfect. Thank you so much.
I'll look
One more
forward
question.
to seeing you, Jesse.
Yeah. Perfect. Thank you, Deborah. Thank you. We see you soon. Thank you.
Okay.
All right, Miss Deborah, real quick, would you be able to have the advice in the construction? Because I in my testing for my C7, I've seen a different type of accrual method for the construction. Are you familiar with that?
That's probably a little beyond me. I could help you with basic stuff, but
Okay.
I've never worked. I mean, I had a couple clients that I worked with a little bit with construction, and it was kind of enough for me to see that I was in over my head, because you're right, it's different.
Temporal. Thanks kindly, Ms. Deborah. Nonetheless, this was very informative. Very informative. I thank you kindly.
Oh, you're most welcome. I thank you for saying that.
Well, thank you so much. So I think that brings us, Deborah or Joseph, if you had any other final thoughts before we wrap up. But thank you so much to you both for your time and to all of our participants that joined us.
Thank you. I just want to say thank you for having us. I mean, we appreciate being here and be able to kind of connect folks with resources. I mean, that's the name of the game for us, to help try to educate the business community, and we do whatever we can to kind of help businesses get to that next level. So if you're interested, as we mentioned before, sacramentovalleySBDC.org is the first step.
And I just want to say good luck to you guys with your businesses.
Definitely.
Thank you so much, and thank you, Patty. Thank you for all your work.
Yeah,
And
thank you so much, Jesse.
for us.
Thank you. I'm glad I could support.
Thanks kindly. We appreciate you.
Okay. Thank you, everyone. Have a great rest of your evening.
Yes, ma'am.
See you next time.
Bye-bye.
You too.
All right. Good
Bye-bye.
night.